Welcome to the Stockscores Market Minutes for December 19th, 2011. Quick reminder, if you want to subscribe to my free weekly newsletter, go to stockscores.com/newsletters.asp, the address on your screen, and subscribe to that newsletter, which is sent out each weekend and is always free. Let's start off with the euro, which continues to be in a downward trend. This morning we're getting a good jump in the euro, but it has not yet broken that cycle of pessimism that we can define with that downward trend line. And so while there is some reason for a little bit of short-term optimism today, we shouldn't get too excited until that downward trend line can be broken. The US dollar, conversely, has retracted to its upward trend line where it is expected to bounce, and so far it is. We saw this morning it was at its lows. It is now moving above those lows to the high of the day, and that is a sign that it is finding support at that long-term upward trend line. The price for gold really got beat up over the last 2 weeks, and it came down to its long-term upward trend line. While many people were saying that this was the end of the bull trend in gold, we can look at the chart and say that that is really not the case. Until that long-term upward trend line, which is the bottom green line on the chart, until that line is broken, we shouldn't write off gold just yet. However, I don't think that there's tremendous upside potential because we have those falling tops over the last 4 months, and that shows that there is some pessimism slowly coming into gold. Chart for oil is in a upward trend, at least in the short-term sense, although if you look at it in a very long-term sense, oil is stuck in a sideways trading range. It bounced today and will probably continue higher in the very short term, but upside is relatively limited by that resistance at the red line. And so I wouldn't get too optimistic about oil, but it is certainly looking better than most markets. The S&P 500 is working on a long-term bottoming pattern. That red line that I have drawn on the chart shows the downward trend over the last number of months. In the short term, we've started to build some rising bottoms, which has not happened for some time. What we ultimately need to see is a break of that long-term downward trend line. Today, the market is breaking its short-term downward trend line that is built up over the last couple of weeks, but it is still below that long-term downward trend line. Finally, before I get into my time frame confirmation portion of the presentation, we have here the VIX, which of course represents fear in the market, and fear is in decline. That is a good sign if you are a bull in the market. If we get a breakdown through support at the green line, look for fear to continue to fall, and that will be supportive for stocks. All right, when I'm looking at charts, I try to look at multiple time frames. What I've done this week is looked at the TSX on an intraday, daily, and weekly time frame. And you can see here on the intraday that the market this morning is rallying up to resistance at that downward trend line where it is getting stuck. And that is a sign that it wants to go higher, but until it can break through that downward trend line, it isn't going to move upward. Now, when we go to the daily chart, we see a market that is in a long-term downward trend that has some move up to the long-term downward trend line at the red line there. And so if we can break what we saw on the short-term downward trend line, this one, if we can break that line, then expect it to rise up to the next red line. Now, it makes some sense that that will happen because we've also bounced off of support on the daily chart. That's the green line that I have there on the chart. And so my short-term outlook for the TSX and really North American markets is that we'll see a rally upward probably to finish this year, setting us up for maybe a break of that long-term downward trend sometime in 2012. Well, then when we look to the very long-term chart, this is the S&P, or pardon me, the TSX index on a weekly time frame, and you can see that on the weekly time frame we're actually in a long-term upward trend still, but certainly the downward trend that's been underway for most of 2011 is still in place, and until that red line can be broken, I don't expect to move higher. All right, so my ratings are neutral for US and Canadian stocks, neutral for gold, and neutral for oil. Oil probably looks better than most. It just doesn't have great upside potential. Gold is fighting some selling pressure, but it has not yet broken its long-term trend. In the short term, I think North American stocks will move up, probably to finish off of 2011. What will be important is whether they can break that long-term downward trend line, and that would set us up for a recovery in 2012. Fear continues to diminish, as we saw on the VXX chart, and stocks are starting to work on making that bottom for a rally into 2012. Well, that has been the Stockscores Market Minutes for December 19th, 2011. Have a great week in the market, have a happy holidays, and trade well.